Most homeowners approach their renewal thinking about what to ask their broker. Almost nobody thinks about what they need to tell them. And that second conversation matters more because the things you don't mention can quietly affect what you pay. And in some cases, whether a claim gets paid at all. I've spent nearly a decade working inside the Canadian insurance industry. In this video, I'm going to walk through exactly what to tell your broker before your renewal date, why each one matters, and what can happen if you leave it out. Start with the thing most homeowners get backwards. Telling your insurer about a change to your property is not automatically bad news. It cuts both ways. Some disclosures may lower your premium. A new roof, a monitored alarm system, an automatic water shutoff device, updated wiring, these reduce the insurer's assessment of risk and they can reduce what you pay. If you don't mention them, you don't get credit for them. Your insurer may not automatically update your file just because the work was done. Other disclosures may not lower your premium. They help protect your claim. If you finished your basement, added a structure, or started renting out part of your home, and you never told your insurer, the policy they issued may not reflect what actually exists on the property. That's the part homeowners underestimate. Your policy is priced and written based on the information the insurer has on file. If that information is materially out of date, the coverage may not respond the way you expect when you need it. So here's what to tell them. 5 categories. 1. Structural updates. If you replaced the roof, updated the electrical, replaced plumbing, or did foundation work since your last renewal, tell your broker. These are the updates most likely to work in your favor. An aging roof can be a major underwriting concern. A newer roof may reduce that concern, but only if the insurer knows about it. Have the invoice or contractor documentation available. 2. Renovations. A finished basement, an addition, a major kitchen, or bathroom renovation. These increase the cost to rebuild your home. If your dwelling limit was set before the renovation, it may no longer reflect what it would actually cost to rebuild. That gap doesn't show up until you have a total loss and discover the limit is short. 3. Protective devices. A monitored alarm, a sump pump, a backwater valve, an automatic water shutoff. Many insurers offer discounts for these. Most homeowners who install them never think to mention it, and the discount never gets applied. Ask specifically whether the device qualifies and what documentation is needed. For a monitored alarm, that's typically a certificate from your monitoring provider. 4. Occupancy changes. This is the one homeowners most often leave out, and it carries the most risk. If you started renting out a room or the basement, if you began running a business from the property, or if the home has been vacant for an extended period, tell your broker. Standard home insurance policies are written around specific occupancy assumptions, rental activity, commercial use, and extended vacancy can all fall outside those assumptions. 5. New structures. A detached garage, a shed, a pool, a large deck. Detached structures are often covered as a percentage of the dwelling limit, and pools frequently carry their own liability considerations. If the structure isn't on file, the coverage question becomes complicated at exactly the wrong moment. Let's be precise about the consequence, because this gets exaggerated online. A material change is not every tiny improvement to the house. Painting a room or replacing a faucet is usually not the issue. The bigger concern is a change that affects the value of the home, the chance of a loss, or the way the property is being used. A finished basement, a rental unit, a home business, a major electrical update, a new pool, or a detached structure can all change the risk picture. When in doubt, tell the broker and let them decide whether it matters. Not disclosing a change does not mean your policy is automatically void. It means that if a claim arises and the insurer discovers a material change they were never told about, they may reassess how the policy responds. Depending on the change and the circumstances, that can affect the claim settlement, the coverage terms, or in some cases the policy itself. The specific outcome depends on the insurer, the province, and how material the change is to the risk. But the pattern is consistent. The homeowner finds out at claim time, which is the worst possible moment to discover a gap. Compare that to the alternative. You tell your broker about the finished basement at renewal. Your dwelling limit may get adjusted. Your premium may change. But your coverage now better reflects the house you actually own. Timing matters. Have this conversation 2 to 4 weeks before your renewal date, not after. Before the renewal, changes can be factored into the pricing your broker brings you, and if the news is good, a new roof, a new alarm, it can be reflected in the renewal offer itself. After the renewal has processed, you're making a midterm change instead, which is a slower and less useful conversation. Keep it simple. Ask your broker directly. Since my last renewal, here is what has changed on the property. Then run the 5 categories: structural updates, renovations, protective devices, occupancy, new structures. Ask them to confirm in writing what has been added to the file and how it affects your coverage and premium. A verbal mention that never makes it into the file is hard to prove later. Here's the reframe. Most homeowners treat the renewal as a bill to be paid or negotiated. It's better understood as the one moment each year when the insurer's picture of your home gets updated. If that picture is wrong, everything downstream is built on it: the price, the limits, and how a claim gets handled. What to do in the next 2 weeks if your renewal is coming up. List every change to your property since last year. Sort them into the 5 categories. Call your broker. Ask for written confirmation of what was added. The free homeowner checklist is in the description. It covers the disclosure and renewal questions worth reviewing before every policy decision. If you found this useful, subscribe. I publish regular Canadian insurance breakdowns for homeowners. Everything I cover comes from nearly a decade working inside the Canadian insurance industry. See you next week.